Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite, we have Hugo Renaudin. He is the CEO of LGO Markets, and we're going to focus on why institutional investors are apparently hesitant to enter the cryptocurrency markets. Hugo, we have a lot of ground to cover here. It's no secret that there has been some hesitation in the market, but you've identified 3 reasons why you think investors are still frightened of the cryptocurrency ecosystem.
Yeah, absolutely. I think the first problem is a lack of transparency. I mean, you have a lot of intermediaries. You don't really know how to trust them. You don't really know what's behind the numbers that they're showing. You know, for instance, if you're dealing with an exchange, you don't really know what's the price like, what it represents. Actually, you don't know if there's manipulation, if it's perfectly transparent. It's a fair and orderly market, so you don't know. And so that's a big problem when you're speaking with institutional investors, which have a fiduciary duty and have to show that they're doing their work properly. So first problem, lack of transparency. I think the second problem, which is kind of tied to this one, is a lack of trust. And the way you see that, I mean, you see a lot of headlines about hacks and lack of security in the different markets and in the exchange business, and that obviously frightens a lot of institutional investors and retail investors alike. So building trust in this ecosystem, it's really one of the most important things. Mm-hmm. The third point, which is more based on my business model, I think the financial ecosystem, the financial infrastructure, which is tied with the exchanges of Bitcoin, is really not fit for any traditional investor. If you look at how traditional retail exchange for cryptocurrency is structured, it's really way different than what you have in the traditional financial markets, and you're well positioned to know that as Nasdaq. Right. You have platforms which are at the same time exchanges, custodians, clearing firms, prime brokers. They do everything at the same time, and that obviously weighs a lot of risk.
Right, it seems like it's very fragmented as it stands right now. Are solutions within investors' reach?
It really depends, like what kind of investor you're speaking about. So, retail investor. If you're a retail investor, you have all the solutions in hand to invest in crypto and to get exposure to this new asset class. When you're an institutional investor, it's really different because you have this fiduciary duty again, which prevents you to take any kind of risk. The biggest risk that you don't want to take as an institutional investor is counterparty risk. I mean, I think everyone still has in their mind Lehman Brothers, where basically you had this big intermediary that was holding the funds, and all of a sudden the funds were lost.
Right. I mean, that's what happened.
That's basically what happened, and so that's the problem. Right now we have solutions which are made for retail investors, but for traditional institutional investors, those solutions are too black boxy, too risky, and it's really not the solution that these investors can use for their own business, their day-to-day business.
All right, let's go back to LGO Markets, and what are some of your golden rules for building trust?
Yeah, so essentially the first one is full transparency. So we as a team, we found it weird that in a space which is the blockchain and cryptocurrency space, where basically you can do trustless interaction with someone else, you still have to trust those intermediaries, the exchanges, the brokers, and whatnot. So what we bring to the table is what we call provable transparency. All of our trades, all the orders are provably transparent. We can show that all the trades that we match on our platform actually come from actual orders that come from our clients, and it's completely transparent from A to Z. So there's no fake trades, no fake volume, there's no price manipulation. So that's the first one, provable transparency. Second thing, security by design. We're building our solution with security being one of the most important features of our platform. What that means in the Bitcoin space, in the cryptocurrency space, essentially it's how you store the keys that allow you to access those assets. We use hardware, dedicated hardware, which is the safest solution that you have right now. We put in place all the cybersecurity solutions that are possible to avoid any kind of, let's say, hack, any kind of risk in this side.
So when you hear, you see a headline that someone's wallet was stolen, they lost millions of dollars of cryptocurrency, the security on the LGO Markets platform is designed to help prevent that?
Yes, absolutely. So there's 2 things. One, we're not holding the client's funds, and that's basically the best security measure that we have. We're not holding the funds. We're working with banks, we're working with custodians, working with clearing firms that take care of this risk, and that's their job. They have a business that they had for hundreds of years, which is holding the assets of clients. We don't do that. An exchange shouldn't hold any funds on behalf of their clients. We don't hold any funds. So if we get hacked, the client's funds are safe. So
Right.
that's the first thing. Second thing, the whole chain that allows you to move the funds based on the trading activity that you have on LGO is done with the most secure processes. So using hardware is one thing, making sure that you have a cybersecurity plan and cybersecurity processes, which are top level, is also one of the prerequisites that we have.
Is there a clearing and settlement process in place?
Absolutely. So that's where we differ from all the retail exchanges. We're, I think, the first exchange, the cryptocurrency exchange, with a real post-trade settlement process. So as I mentioned, we're working with clearing firms, with custodians, and we're the execution venue, just like in any traditional market. So trades are matched on our platform, they're cleared and settled with clearing firms, and the funds are stored with custodians.
It kind of sounds like an equity market structure,
Exactly.
or very similar.
Yeah, exactly. And one of our focus, as a company, is to make things as seamless as possible for our clients.
Right.
It's a difficult enough decision when you're an institutional investor to say, okay, we're going to invest in Bitcoin, we're going to give exposure to Bitcoin to our own clients. We have to make things easy for them, and making things easy for them, it's building the whole infrastructure so that they just have to click on a button, and the trading, the clearing, the settlement, all the risk structure that they have in place around this process is actually the same that what they would have for traditional asset class.
Because as far as I know, and you had mentioned before, this is the first time I've heard of something that sounds as similar to equity market structure that institutional investors are familiar with. And I think that was one of the largest issues, particularly around custodialship,
Yeah.
in terms of why they weren't getting involved in the digital asset space. But let me ask you this question. Do you think the severe decline in cryptocurrency assets and flow, is that going to detract investors, whether retail or institutional?
I think it's, when you look at the news in the cryptocurrency space, you really have to take a step back. What you see, the prices that you see, the volumes that you see on websites like coinmarketcap.com, things that are publicly available, it's only the tip of the iceberg, because it represents a very small portion of the market, which is the retail listed market. There's a huge, for example, in the exchange business, there's a huge OTC business, which obviously doesn't appear on those figures. So really, I think one has to take the news and what happens, bear, bull markets, very lightly, because that's not what happens on the back end. What I see, speaking with traditional institutions, is that every institution has a blockchain plan, as they have, every financial institution has a data plan or whatever. Every institution has a blockchain project, a cryptocurrency project, because it's a new asset class, and as a financial business, you need to adapt to those new asset classes in order to keep your current customers, get new customers, and to make revenues in the end.
I think one of the other issues is as well, when you pull up quotes, or when you look at different exchanges or different platforms, a lot of the prices don't even match, and the spreads, there's a big disparity in the spreads.
Yeah.
And I think institutions are struggling with, how do we price these assets? How do we know what's real? How do we know what's not? So my final question to you is, what does the crypto space look like in 2 to 3 years out? Will these problems be addressed, and will a lot of the things that we're talking about in theory finally be put into practice?
So I guess in terms of the current structure of the cryptocurrency market, the first problem is that there's no, as you mentioned, no reference price. And there's a few reasons behind that. One, there's no exchange which has taken the lead on everything. And to be frank, I'm not sure it's going to happen, because it's such a fragmented market.
Yeah.
Sometimes a market will be priced like that, but you will have arbitrageurs which will go on the other market to kind of get the spread and make money out of the spread. So I think what you need is transparency on full transparency on a few exchanges, which have this kind of stamp of approval for institutional investors that can put a lot of flow into these exchanges, and then you'll have kind of the reference infrastructure. The second point, I think it's really important to understand what a cryptocurrency is. And that's really, for me, a very similar story happened a few hundred years ago when you had the first dollar bills, the first bills, or paper certificates. So you were not exchanging golds, but you were exchanging paper, essentially, which represent ownership in something. And when you think about what a token is just a medium of exchange, right? Instead of sending you a wire through my bank, I can send you a token, which represents something of value. And if you look at if you look at this function of a token as just a medium of exchange of value, there's an alley for cryptocurrency businesses, because essentially a cryptocurrency can be anything. It can represent the ownership in a traditional asset. It can be all kinds of assets of values that you exchange through a token, through a cryptocurrency.
I think you make a great point when you talk about educating investors on what cryptocurrency is, and I think there is some confusion, at least when I first learned about it, you're Bitcoin. Coin sounds like a hard asset to me, right? And it just, what some of them are named, you try and associate it with what you know with traditional currencies, and I think when you explain it as it's just like anything else, it's a way to place a value, it's a way to exchange value, that makes it really helpful. I also think investors want to understand, what does a broker-dealer look like? Does a wallet equal a broker? Does, what's similar to more mature market structure that I can relate it to? And then how do we improve upon it from there?
Yeah, I think so. Sorry, I think the infrastructure is pretty much the same, When you think as a token as just a way to exchange value, there's no reason why, it's just a support, right? And the assets which use this support to be exchanged, they're still financial assets, they're commodities, they're coins, and everything is regulated. I mean, a security, if it's a token, if it's a paper certificate that tells you have this stock or whatever, it's still a security, and there's no reason why broker-dealers should not exist in the future, or or that they should adapt. A token representing the ownership in a company, it's equity, and to trade equity, you need to be a broker-dealer. So I think really my approach with regulation, it's very pragmatic, and it's really understanding it's about understanding what a token is, what a security is. A security is a security. If it's exchanged through a token, through paper, through book entry, it's still the same. It's still a security. And actors just like us, who are in this business of facilitating exchanges of those securities, need to be registered as broker-dealers. It's simple.
All right. Well, we'll see where we are in 3 to 5 years from now, because I don't think digital asset strategies are going away at all. Well, thank you so much, Hugo, for joining us at MarketSite.
Thank you very much.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.